In this video, traders, we're going to look at some of the best indicators for day trading. Stick around. Hey traders, a very warm welcome to you. Thank you for joining me. All right, so indicators are useful for day trading. Now, before we kind of go into the depths of this, I want to point out that what we don't want to have is to have our charts cluttered up with so much stuff. It makes zero sense. There's no value to it, and we end up being confused by all the stuff going on. So be very mindful about that if you're choosing an indicator for day trading. The other thing, the way that I like to look at indicators is that on one side, I use them as a kind of a filtering process. So what it does as a day trader, we want to be careful not over trading, guys. Super common problem that just devastates day traders' accounts. Trading too much, too often, we get sucked into things that we shouldn't. So having a good filtering process allows you to stay out of potentially lower quality trades and bring the higher quality trades to your attention. So that's one way that I like to use indicators. The other way is to actually give you a signal, if you like, to pull the trigger and take the trade, whether that's getting in or out of the trade. So two distinct different ways of looking at it. You can either use kind of both or one or the other, but I think if you separate them like that, then it becomes easier, it does for me anyway, to think about what's going to give me the best advantage in this angle on the filtering process, and what's going to give me the best angle when I'm looking for an actual signal to take the trade, if that's how you operate. And also, don't forget, you can mix and match with your price action, other bits and pieces. You don't have to have that, but sometimes it's nice for certain setups to use indicators to guide you. Anyway, guys, this video is sponsored by our channel sponsor, which is in the description below. They use MT4, MT5, offering a huge suite of markets, huge selection of markets. So go and check them out. As I say, link to them is in the description below. And these indicators you can load up on MT4 and put them on your trading account quite easily. All right, so the first one I've got for you is simple moving average. Now listen, these aren't revolutionary, but I want to show you how I think that they're good. So I prefer the 20 and the 5 are generally my go-tos. Now why is that? So 20, especially on a lower time frame chart, like a 1 minute chart, acts very nicely as a support and resistance, a dynamic support and resistance level for price. So pushing up, we're pulling back very often, we'll come back to a 20 period moving average before we continue our next leg. 5 period, slightly different. This is more aggressive. It's going to run very, very tightly with price. But if price is really ripping to the upside or downside, very often the 5 kind of keeps things pinned, and it's a very good way of holding trades. If you're in a trade as it's starting to run and run and run, holding the trade until it finally breaks the 5. Now, yes, it's very aggressive and you're not giving it any room, but if you're day trading and you're kind of maybe even scalping, you might be in the trade, it runs on 10, 20 ticks, you might be looking to cover it, you might just say, hey, I use the 5 just to trade it, and very often you might get a little bit more as it stretches and stretches and stretches. So it's a good kind of momentum drag, if you like, and so those two are super useful. Simple moving average, 20 and 5. RSI. Now the RSI is, you can use a stochastic or CCI, anything that's oscillators. Now these kind of things, the way that they work the best, in my opinion, is yes, there are ways to use them as a kind of entry signal, but they work well as a filter. So you can say to yourself, hey, I'm not going to buy anything that's overbought, especially if you're focused on day trading, mean reversion, normal market conditions. Sure, some trend days are just going to rip and you're going to have overbought conditions for a long time, and you might have to be aware of that, but still I wouldn't be buying overbought. Or if I would be very, very strict with the setup that I'm taking. Even in a trend condition, you want that to unwind. It may not get to oversold, but at least if you're saying, hey, I'm not going to start chasing stuff that's overbought to the long side, I'm not going to start chasing stuff that's oversold to the short side. What this allows you to do is at least give you a framework and a roadmap for working with. And if you're definitely one of these traders who tends to have a bit of FOMO and chase things, this is the perfect way to really kind of say, hey, this is a no-go zone. Overbought condition, I'm not going to buy it. So that's a really good kind of filtering type indicator. And of course, you can use it to get into a trade as well if you kind of wait until you're oversold and then it curls back up. But that's the more the textbook way, the more traditional way. There's nothing wrong with that, but I think the filtering way is super useful. Then we've got Bollinger Bands. So Bollinger Bands, obviously a mixture of the moving average with a standard deviation band around it. Now, the way to look at these, there's many ways, and they're actually super useful tools. Some people don't like them because it makes the chart a bit cluttered, and I get that, I understand that. I don't use them all the time. It's not something that I really have on a lot, but I think they have their place. And that is when you have price that's just ripping back up. Maybe it's touched that upper bolly, broken out the upper bolly, pulled back a bit, retested. Then you've got this situation where, okay, I know it's an extreme move because it's already broken out of the Bollinger Band. If I've got set on 2 standard deviation, for example, or 2.5, if you kind of want to have fewer signals, it's ripped out the upper Bollinger Band, pulled back, retested, and then now maybe you're taking a mean reversion trade. And the easy way to kind of signify a mean, or to use as a mean target, would be that simple moving average in the middle of the Bollinger Band. So you're using the standard deviation to say, hey, we're stretched, but then again, you're waiting for it to burst out of that last little bit. So if you have, imagine that's your Bollinger Band here, and the price, that's your midpoint here, you know, price might well kind of rip up and hug this, but then when it bursts out, you know, then when it does a lower high here, you know that potentially you can take a mean reversion trade here. Appreciate it's not for everyone that. Appreciate it's not really aligned with many people who want to align with the trend, but there's other ways of doing it as well, guys. Like first touch in the lower channel on an uptrend is a good way of getting into the trade. First kind of kiss of the moving average after we've hugged the upper bolly is a way of getting the trend, even if you're not trading a mean reversion. So there's plenty of different ways of a Bollinger Band. So have a play around with that. Count the channels, similar type of thing, but just using ACR. All right, these aren't really indicators, but I guess they are because they're kind of labeled that on a platform, so I'm going to call them indicators for now. Volume, super useful. If you can get volume for the market you're trading, then you can see the participants, the urgency, the kind of how much money flow is coming in on a breakout. If you're watching a breakout, how much money flow is happening, or how much transactional volume is happening compared to a drive if you're looking for a pullback. So many different ways of using volume, I think, is very, very useful. And of course, the final one is Fib. Now, Fibonacci is one of these things where it just, I like anything myself where you just can frame the market better. And even if you're using Fib, or if you're using just quadrants like 25%, 50, 75, something that just frames the market, that just gives you an idea. It's like, okay, here, you know, we rallied off from the low, there was some news, up we go, and we start to kind of frame the market a little bit. Then we know the strength of kind of pullbacks. We go, right, well, that's, you know, below the 25%, it's not quite 50%. You kind of get to feel a little bit what's going on. So whether you're using the actual Fib numbers, like I say, or using some little quadrants or whatever, anything that helps you frame things and put it in perspective of is bullish, is bearish, how deep is it, and relative to a move like a significant drive off the low, like an open, like a swing low on a Forex chart, on a Forex swing chart, anything like that, you can start to frame, start to picture, and start to feel about where things could go. You start to do things like, okay, what's that distance between there and there? Can I extrapolate that out there for a target? Is that something that's going to work? Yes, possibly. Multiple ways of using Fibs, guys. So simple moving average, 25 are my go-tos, but again, people have different success, different things. 10's another popular one. RSI, using that oversold or overbought. Condition as a kind of filter. A Bollinger Band, a couple of ways of using that for the mean reversion type trade, or for the first touch of the mean after the upper bolly's been tagged, or lower bolly. Volume to confirm your breakout type trades, and then a Fib tool, or again another kind of tool that splits up that move into sections so that you can quantify and frame your trade. Anyway, guys, those are some of the best day trading indicators in my opinion. If you haven't checked out our channel sponsor, do so now. Link to them in the description below. Thanks, guys. Bye-bye.